All right, guys, welcome back to cryptojiri. Today we'll be talking about the Bitcoin price, as well as a couple articles about where the Bitcoin price will be heading, as well as the technology itself. All right, so let's get right into it. So today is, of course, June 9th at 10 a.m. in the morning. So as of right now, it is bouncing off the 61.80, which is not a good sign. It did break the previous candles right here, but of course it could still bounce back, go up to the long position, or it could bounce back into a short position, come down to about 1200 pips, which isn't not that bad, right? You could get a good short out of it. But other than that, so far right now, I'd say, we're doing very good for the price itself. If it keeps respecting this support right here in the long term, I think we'll be doing very well. I would see a breakout soon happening in the next couple of days, just because it is near that 61.80, like I said again. So breakout right to the upside or the downside. So I'll keep an eye on that and see what goes from there. But yeah, so that's basically what the price is looking at right now. But like I said before, I wouldn't be surprised if there's going to be a breakout here soon or later, right? So first article of the day: Bitcoin price volatility hits 3-month low, which I kind of do not agree, just because of where it's going with the charts itself. Because if we do look at the weekly, I wouldn't say it's the weekly or the month low, just because of how fast it got up from the 4,000 area all the way back up to the 10,000 area, which we were last year back in June at 14,000. So we're not looking too bad. But let's take a look on what that person has been saying. So as you guys can see, Bitcoin price valuations became the calmest in 3 months on Tuesday, as volatility revisited levels last seen ahead of the Black Thursday crash on March 12th. The leading cryptocurrency 30-day volatility has now fallen to 40%, the lowest level since March 6th, according to a blockchain analytics firm into the block. Meanwhile, 60-day volatility declined to 52.18%, its lowest since March 11th. So basically what they're talking about is basically the volatility in the coin itself, which isn't too bad. We've seen worse throughout the years, right? As you guys could see, beginning of 2020 or even the end of 2019, it's been very bad. But this year we do have that Bitcoin halving, which will push us even more up. The declining in volatility may be associated with the lack of clear directional bias in the market. Bitcoin rallied up 150% in 2 months leading up to the May 11th mining reward halving, which I'm not surprised because a bunch of news stations, CNBC, Fox News, all those big news, even Bloomberg, basically hyped it all up. They hyped it back in, I think it was 15 or 16, where it blew up all the way to 20 G's, and then it crashed because there's no belief behind it, right? Like, why would you buy something if you don't believe in it, right? And that's where it dropped all the way down to 15, and it's kept going slowly but surely back all the way down to 10, right? And then to 4, and then went back all the way up to 10 again, and then 14. So nothing too crazy going on, just, the news is basically just hyping it up. But buyers have repeatedly failed to establish a foothold above 10,000. At the same time, downtime has been restricted to around 8,600. Reason being is because we do have a big foothold on true believers in Bitcoin. But there are going to be more wallets made, of course, and more of an upside coming through in the next couple months or even a couple of years, right? So as you guys can see, they put up a 3-day chart for the bearish MACD divergence. Which, like I said again, I wouldn't be surprised if it did went 1,200 pips down to the downside, and then bounce back up again. for a new higher high, right? So that's basically what the article was all about, is just telling you where the volatility stands and how the market's going to be moving in the next week or two, right? Next article says, crypto long and short, Bitcoin's quiet progress is pointing toward a better future. The tensions that have spilled over into the streets of U.S. cities this week are a heartbreaking expression of a long-standing problem that has the whole world in its grip. Inequality is not specific to the U.S., nor is limited to a handful of relatively well-off geographics. It stratifies societies within borders, trapping the majority within a narrow income band, while markets pour wealth into the accounts of the few. It also divides the haves from the have-nots on a spectacular global scale, relegating some countries on the back of the handout queue, while others, blessed by nature and exploited luck, centralize their advantage with technology, moats, and resource supply chains. So basically, I'm not going to go all the way through this article because it is an opinion, but the first paragraph, which I just read out, I do agree because it is factual. A lot of people are getting mad, right, for the specific events that's going on, as well as the way that the markets are moving. Like, right, we're just in a very, let's say, not negative, but a very revolutionary time in the U.S. as of right now, right, with all of the protests as well as financials as well, right? We do see a lot of people not using cash anymore. People are using more digital currencies, right? I'm not talking about crypto. I'm talking about actual digital currencies such as like the US dollar, right? No, everyone's carrying credit cards, debit cards, paying with Apple Pay, et cetera, rather than using cash, right? But now, since, the dollar's crashing, euro's crashing, the pound as well, because it's such an old currency that, it's going to catch up to where, as well as, printing, right? They're printing too much money. So that's why people are going into Bitcoin, Ripple, Ethereum, all these other awesome currencies that are very well known throughout the world, and of course the internet talk, but it is going in the mainstream. As you've seen, hedge funds are buying a bunch of it, which I'll be talking in another video, as well as a bunch of other companies making their own tokens, or even celebrities to support them out, or even really pro athletes. But basically what they're trying to say, financial talk, is that people are getting mad at not the right reasons. You should be mad at them printing too much dollars. You should be mad at politicians, as well as governments, as well as big named investors. You should be mad at those people just because of not the way that they make money, but the way that they manipulate the markets and that the government lets them do it, right? Because it's technically inside trading. It is illegal, but right, they get away with it just because they have a lot of money, and they do pay off people. I'm not hating on that. I'm just saying that the government should not be taking, money from really rich people. But of course, right, lower class wants them to, which I think is in my opinion, I don't think that's true, because when you think about it, right, you came from nothing to something, and all of a sudden, just because you make a lot more money, you have to pay the more taxes just because you make more money. Then what's the point of trying to become rich or wealthy and trying to support your family and your friends, right? It doesn't make sense. We're a capitalist country, and that's how we should be, right? There's no other country like us in the whole world. Basically, all the biggest companies, Apple, Google, etc., have been made in the U.S., right? Just because we are a capitalist country, we're not a communist or a socialist country, right? But enough of politics talk. That's basically what they're trying to say in this article. It is an opinion article, but I do agree with some of the standpoints that that she has been stating in this article. So the next but not least, Bitcoin options growth outpaces futures swaps. Like I said again in my previous video, guys, I am not surprised that Bitcoin is overhauling gold, is overhauling futures, is overhauling the US 30, anything, just because of its volatility and the belief system behind it, right? So as we take a closer look, Bitcoin options trading is growing faster than the futures and swaps market, according to data from Skew, measured by the ratio of aggregated open interest in Bitcoin options market to open interest for Bitcoin future and swaps. A clear upward trend is observable from January 2020 to date. A historical trend of a ratio signals a rate of growth in options open interest that exceeds growth in that of Bitcoin futures and swaps. Open interest defined as the outstanding contracts measured here in dollars. Although the open interest in Bitcoin options is growing and is now roughly 35% that of futures and swaps, it still has a long way to go compared to traditional financial markets where options open interest and trading volumes are generally a multiple of futures, said Suzu, co-founder of cryptocurrency hedge fund Three Arrows Capital. It makes sense for Bitcoin to go a similar route as liquidity improves and institutional players come in, he added. So he is not wrong, right? He's basically saying that, hey, basically time is against Bitcoin, but very sooner or later, more of institutional players, more of traditional financial markets get in this market. It's going to blow up, and it's going to be very well for people in the market that were in it previously, before the whole big trend, right? So I'll link all of these articles in the description. Hopefully you guys did enjoy this video. If you did, comment, like, and subscribe. And of course, again, keep piling, guys, and have a great day.